Welcome to the opening plenary session of the 2021 Asia Pacific Regional Roundtable. My name is Yuki Yasui and I am the Asia Pacific Region's Coordination Manager at UNEP. I'm based in Bangkok, Thailand, and I will be your MC for this session. The open plenary is called Advancing Sustainable Finance in Asia Pacific and is intended to set the tone of this regional roundtable. Today, we are seeing the mainstreaming of sustainable finance among key financial institutions in Asia Pacific as more governments around the world, including some in this region, start to throw their weight behind sustainability as a key source of jobs and growth. And so the new decade has already started with big changes in the finance industry. For example, the launch of the Net Zero Banking Alliance that Eric Usher, head of UNEP, mentioned in his opening remarks. I hope that this session will highlight some of the most salient advancements in sustainable finance happening in Asia Pacific, as well as giving a sense of scale and the speed of change when all this is added up. And to deliver these messages, I'm delighted to say that we mobilized an excellent panel from UNEP-FI's leaders in the region and globally. Let me introduce the speakers. Jackie Johnson will act as the chair of the panel. Jackie is the advisor for climate and sustainability at the Insurance Australia Group. She's also the co-chair of the Australian Sustainable Finance Initiative and co-chair of UNEP-FI's Global Steering Committee. Next, we have Sivan Tuhill, who is the Group Head of Sustainability at Westpac. Sivan is also the co-chair of the Principles for Responsible Banking's board. And we also have Edward Moncrief, CEO of HSBC Insurance Asia and HSBC Life International. Ed is also a board member of the Principles for Sustainable Insurance. Last but not least, to complete this panel, we have Alexandra Michael-Escu, Executive Vice President at RepRisk. So now I hand over the mic to the chair, Jackie Johnson, to start the discussion. Over to you, Jackie. Thank you.
Thank you, Yuki, and thank you for the opportunity for us all to be together at this very important roundtable. As you highlighted, despite COVID, we have seen an acceleration of the sustainability agenda across our region, but across our companies as well. We're going to cover off three key areas, and one is about how impact is being created, and my fellow panelists will help bring this to life. We're going to touch on, well, what actually is happening with the COVID-19 and how that is actually impacting or not impacting on social and environmental responsibilities across our sector. And then we'll finish off with a rich discussion about what are the drivers to integrate environmental and social activity into strategy at a corporate level, because we know why it stays decoupled, it isn't able to get the impact. And so it's like a circular panel, if you like, because that will actually bring to life this first area we'll cover. So the first question that I'll be posing to some of our panelists is, when we think about creating impact, there's been a lot of momentum on ESG reporting, and the reporting expectations have driven a lot of policy and some process change. But really what we're going to explore now is, what are we seeing at a sector level and what are we seeing at a country level that might be changing that pattern and accelerating the impact? And I'll make a few comments and then I'll hand over and ask Alexandra and Sivan to give their perspectives on this question. But I was heartened to be in a meeting with our prudential regulators yesterday here in Australia, where they said 60% of Australian listed companies, the large listed companies, have been using ESG reporting. And that's great, because that is a significant uplift from where we were. And there is a feeling that there is a little bit more momentum about driving the impact through transparency and measurement. But it is a little bit sobering when we think it is this time last year when one of our major companies, not in the finance sector, but it was the finance sector that called them to account, where there was a 45,000-year heritage site, a First Nations site, a rock shelter called Yukon Gorge, was blown up by one of the mining companies. Despite all this sustainability reporting, highlighting the community engagement they had. Now that is a social issue, but it's also an environmental one, because that rock shelter was about an inland lake. And so we're changing the environment around it. And I think that for me crystallises how really the finance sector's being on calling people to account. So in fact, when the board review was held, it was the superannuation industry here in Australia and our investors that called the board to action and said that's not okay. And in fact, put a lot of pressure on their banks, and their insurers also were sending very clear messages that from a finance sector point of view here in Australia, we expect better. And I think that has been an amazing shift, because it's about using our collective action to have a voice and calling people to account. And there's been a lot of change within that company and a lot of accountability that's been driven with the First Nations partnerships. And I use that as an example because I think sometimes we think about the finance sector of the things we need to do, and I'm sure that Siobhan will bring to life the banking perspective on that. And there is, we have to really hold ourselves to account. But we play such an important part systemically. And what I've seen is with the Australian Sustainable Finance Roadmap, which despite COVID, and Siobhan and her company played a major role in this as well, we brought 140 organisations together over 2 years to actually create a roadmap and launch it in December. And then we're doing an updated report on implementation progress in June. So that has continued to accelerate. And it's the first time in my career that I've actually seen on the ground here in Australia, academia, state and federal government, alongside the banking sector, insurance and investor groups, working together on, actually, this is a tricky issue. How do we work together? And that's why I think we've got more collective action happening. And yes, at a country level, we need to make progress. At a company level, we need to make progress. Reporting is only part of that solution, in my view, but it helps us be transparent and hold ourselves to account and others within the system. So I'll open with those comments. Alexandra, given that I've used a very big reputational issue that came to light over a year ago here in Australia, I'd be interested in your perspective, given you are across a lot of the data that's happening in our sector. And if you could just come off mute, that would be great.
Sorry. Yes, sorry about that. So first of all, let me say that it is a very good development that we're moving away from reporting on policies and processes to reporting more on the ground, real on the ground impacts. I think it's also a natural development of ESG as it moves towards maturity and mainstreaming. I think you alluded to that point, Jackie. And that is also very much in line with RepRisk's research approach. So we evaluate a company's ESG risk exposure, and we do that from an outside-in perspective. So we don't look at a company's policies and processes. We look at public sources, public information, stakeholders that external to the company that assess in a systematic and rules-based way how a company manages human rights, manages environmental issues, waste issues, corruption, tax issues around the world where they operate. So, and I think what we see in APAC is when, the discussions we're having with clients in APAC are not so dissimilar in some cases than what we're seeing elsewhere. It's a lot of talk about ESG standardization, ESG regulation, without some sort of common understanding of what ESG is. It's hard to move forward to the next chapter, and it constantly seems like a constantly moving goalpost that people don't know which issue to tackle first. We work with a variety of financial industry players in Asia Pacific, so with asset owners, asset managers, sovereign wealth funds, with banking clients. Well, Westpac is one of them, so I'll let Siobhan talk more about that. But I think there's really a role for data to play in assessing on the ground real impacts. And we see our banking clients and others using our data to really see what is happening on the ground when they're doing due diligence, when they're looking at one of their clients, when they're looking at a lending or an underwriting transaction. There is data that is available from local sources in local languages that can help support that evaluation of risks on the ground.
Thank you, Alexandra. We might come back to some of those points because I think they're really important ones when we come to what's driving some strategy, and particularly what you're talking about is that outside-in voice and the voice of the stakeholder, which obviously gets a much better outcome for sustainability, and we might come back to that at the end of the session. So hold that thought, and thank you. Siobhan, we've worked together for a long time, and certainly I've seen the progress you've been leading. I'd be interested in your view about what are the changes you're seeing on this driving for impact.
The past 6 months have just been extraordinary. I think the amount of change, the pace of change, and the level of awareness and focus has really gone through the roof. We've seen the national commitments at the Biden Climate Virtual Summit. They've really helped to set the tone. And we've also got this, I guess, current period of disruption around COVID, leading people to reflect on the impacts of climate change and other forms of disruption as well. And what we're finding now is that investors are asking really sophisticated questions. They want to see that we are making a difference. They want to see that there is impact. So yes, they're expecting targets, they're expecting shorter term targets, and they want to see the progress around those targets, particularly in relation to climate. But they're also getting quite sophisticated around wanting to understand more about your salient human rights issues, or they might want to understand more about your approach to customer vulnerability and see measurable impact that you're making in those spaces as well. And there's also an expectation of just greater formalisation and greater integration of ESG within organisations as well. And interestingly, it's also how these elements link to each other. So it's not just, we're going to have a conversation about climate and we're going to have a conversation around social impact. They actually want to see how these elements start to interlink. So it does drive a much more granular awareness and a requirement for organisations to be much more thoughtful around how they consider these issues and how they assess for these issues, particularly in their lending activities. We're also getting the questions around what matters most. So there is that question around strategy, but what are the key elements around ESG or sustainability that matter most, and an expectation that you have been engaging with your stakeholders to really gauge what are the most significant areas of focus for your business. And then, of course, regulation. So globally, locally, it is absolutely game on. I was on a call yesterday listening to regulators from all around the world talking about the work that they're doing around climate change and climate risk. We're now seeing prudential guidance emerging right around the world, including here in Australia. We've just seen the Australian Prudential Regulator deliver a draft Prudential Practice Guide on managing the financial risks of climate change. And really interesting around how it spells out guidance around the role of boards, around senior leadership, around how this should be integrated within an organisation, and really setting out the expectations around all kinds of activities that a bank or a financial institution might consider and how it manages this kind of risk class. Really fascinating to see how this is really shifting and becoming much, much more formalised. And I guess in line with that, the expectation is shifting from what was once awareness, and certainly there's been good awareness. It's now the expectation is to action, and coming back to that idea of impact. So it's fascinating that we've got a climate vulnerability assessment or a stress test coming our way here in Australia. And then this is all then leading to and translating to a growing interest around sustainable finance. So we're now seeing not only we are focusing on the risk piece, and then how do we then help our clients transition? That's the really exciting piece. And then how do we back those businesses that are fit for the future?
Thanks, Siobhan. And I think you raise a really important point about the integration, and Alexandra touched on it as well, that we can't just sort of have this average across environment, social and governance. It doesn't work that way. But what we're also seeing here, and particularly in Australia, I think our public became much more aware of climate change at the same time COVID was emerging, because of course we were coming off the back of the awful bushfire season in late 2019 and 2020. We must not forget that many communities are still impacted on their recovery, and that was to from heat stress and impacted so many postcodes. We then have COVID emerging, and then what we've now had is some flooding that's affected over 1,700 postcodes that's impacted on the banking clients and also the customers of the insurers. And once again, it's the same communities that have been impacted by excessive rainfall that's out of the ordinary and heat with the bushfires and with COVID. Your point about connection, I think the general public are starting to connect the dots because it's a very personalised experience for them. So as a finance sector, we need to be responding to that. They're our customers and we need to understand that. So thank you for highlighting that. I thought that was a really important point and leads beautifully into the next question about COVID-19. So I think most companies we all work for would have had pandemic on our strategic risk profiles, and we would have had scenario discussions about it, but probably in our wildest dreams, we would never have thought the whole world would stop and shut down. And for us to be in Australia, where there is debate about whether we'll be allowed to travel in 2022, we would never have thought of that back in February 2020, for example. So I'm really interested, particularly for Ed, who's sitting in Hong Kong, to really bring to life a little bit about, do you think COVID-19 has accelerated the focus for environmental and social activity for our sector and cross-sector, or do you think we've had to pause a little bit? I'm interested in your view.
Thanks, Jackie. And I mean, the short answer is yes, right? I think COVID-19 has accelerated, sustainability in action, particularly across the E and the S dimensions. And I think the long answer is at different paces in different parts of Asia with different sort of velocities. But ultimately, we're living through and hopefully coming out of, the biggest health pandemic for a century since the Spanish flu. So this has raised awareness of the importance of health and well-being, one of the UN's key sustainable development goals, to unprecedented levels, right, across the full stakeholder maps for institutions and for financial institutions in particular. Historically, perhaps, whereas this has been primarily viewed through a shareholder lens, a reporting and a disclosure lens for analysts and investors, now I think institutions are looking at health, well-being, the general fragility of our ecosystems at a customer lens, at an employee lens, through their business partners, their supply chains, etc. Because to your point, every company, no matter how big or small, has been impacted and interrupted by this pandemic at some point over the past 12 months. So awareness is very, very high. Health consciousness is extremely high. And I think if I look at my sector, the insurance sector, I think the reaction to that and the outcomes that have come out of that have been very, very positive and very strong. And what we're seeing is a sector moving from, changing its entire business models and focusing, instead of just being a payer and working on a reimbursement basis, to really optimizing health prevention. And for sure, COVID has catalyzed this. Helping customers and societies understand their risks, manage them better, giving them access to medical facilities, preemptive checkups. China, which is definitely a leader in this space in terms of how it manages telemedicine and teleconsultation, has created, sectors created, much lower barriers to entry, on this subject for all customers. And I guess what I'd say is COVID has, I think, increased the awareness of societal inequalities for a number of businesses and a number of customers. It's really put it into the spotlight because it has typically been the poorer parts of society that have been impacted the most. And institutions are starting to react to that. And typically this kind of starts through a philanthropy lens, a bit of charity giving. Companies and banks and insurance companies were wonderful in sort of February, March last year, getting access to masks and protective equipment and giving that to poorer communities. But I think now it's starting to go deeper than that, and it's starting to embed into the organizational DNAs of companies and how they think about their practices and their policies. And again, I don't think it's equal. I think again, if I look at the insurance sector, a lot of the life insurers are big institutional investors, and particularly in Greater China, what we're seeing is more and more of these companies embedding E&S into their investment frameworks, which has, to your earlier point, Jackie, a systemic impact on other sectors. Right? And what we're seeing also in On the non-life side is, Hong Kong has just announced the launch of a pilot insurance-linked securities scheme, grants to facilitate the issuance of catastrophe bonds in Hong Kong against environmental risks in China. So, and there is perhaps the argument, at least optically, North Asia is accelerating faster than Southern Asia. But certainly, I think on the whole, and particularly through a health, well-being, and environmental lens, COVID has accelerated this for sure.
Well, Ed, you covered a lot of content there, and one that I'd like to unpick a little bit is you made the point about digitalisation and particularly telehealth type delivery. And if we think about the connection of the public with environmental and sustainability and social issues, it's often through social media, but also we can also deliver our services in a different way, and everyone had to really adapt and manage their workforce working from home, as well as you're talking in your sector in life insurance and in health, delivering the service through a digital channel that, in normal times we might have had as project work that we would deliver, and then suddenly it's accelerated. I mean, that must have really put a lot of pressure on how you had to think about that and deliver to meet the social needs. And then my question on the point you raise about inequality is, do you think this acceleration of digitalisation makes the inequality harder if you haven't got access to digital systems?
Yeah, two very tough questions. So let me try and answer. I think the first one for sure, right? But I guess this is where markets are a real force for good in my view, because the element of competition forces institutions, to adapt and to implement, digital technology and virtual technology, and to your point on things like health insurance, actual digital fulfillment, of what's been a face-to-face service for 500 years. And if you're not doing it and your competitors are, then you're not going to have any customers at all, right? And it's hard enough managing businesses through a pandemic. It's even harder if you're doing it worse than everyone else. So I think the force of the market in financial sectors is very powerful there, and is a force for good. I think to your second question, I think that would be the natural hypothesis. But what I've seen, or what we've seen, again, particularly in Greater China, is never underestimate digital adoption across all ages, across all segments of society, right? I think smartphone utilization is 97, closing on 90, or closing on 100%, right? And what that has done, in my view, is it has increased accessibility, to financial products and services that have hitherto been out of reach for large sectors of society. And that comes at risk. And you'll all have seen in the news recently, regulators are looking at some of this stuff with very acute attention to make sure it's controlled properly. But nonetheless, I think it is a force for good. And it does create a democratization of product and service to people who, for either a lack of income, a lack of assets, a lack of transport, basic human requirements that have been precluded from accessing insurance protection or wealth management products or financing and lending facilities, etc. So I do think that is happening. Again, I do think this part of the world, China is really leading at a tremendous pace the rest of the region in this regard. It does need to be controlled, but it is, I think, a very powerful accelerator.
So ironically, the acceleration for COVID-19 might come from this digitisation that creates more equality of services being delivered through the finance sector. And I think we need to reflect on that across all our sector. I think you've brought home a very important point. Alexandra, your insights in how you've seen COVID-19 play out in terms of the impact on environmental and social activity.
Well, I would second what Edward said, in that, the short answer is that it did accelerate. And I think many thought at the beginning that COVID would sideline ESG or would slow the focus on it, but it really had the opposite effect. And it goes back to a bit to what you were saying in some of your remarks earlier, Jackie. I mean, it helped to strengthen ESG overall because people saw in a tangible way the interconnectivity between the health of our environment and the health of people and the health of our society and the health of the economy. So what happens somewhere else or over there doesn't stay over there in a world that's globalized and interconnected. and things have ripple effects, and few things have had ripple effects as broad as COVID has. And when the pandemic unfolded here in spring last year, we actually took a poll of our clients to see what they were thinking about COVID and ESG, and we found that over 50% of clients said that it helped strengthen the topic of ESG within their organization. And 80% of clients saw that COVID could be a potential ESG risk factor. And so it's unpredictable and unprecedented events like COVID that lead to new ESG risks, but also reveal ESG risks. And we saw that in various cases. One of the big stories of last year was the Boohoo, where in the UK retail organization, where outbreaks in their factories uncovered unfair labor practices, poor health and safety issues, and employment conditions, and so on. So I think there's a lot of new risks that are appearing because of COVID, but it strengthened ESG overall. And in many ways, it really elevated this topic of S, because there's been a lot of talking about the environmental part of ESG, and climate change, of course, is so critically important. But I think COVID really helped to really elevate and highlight various social issues like health and safety, like employment conditions, and most recently, as we just talked about, really now bringing to the surface this topic of inequality.
Yeah, thank you. And I think some of your points there leads beautifully into this question about how we're seeing the integration into strategy at a corporate level, because that's where we're going to drive the biggest impact. And Alexandra, I'd like you to build a little bit on your last points then, because it's those shifts of the connections, thinking about the employee practices and integrating it all. I mean, how are you seeing the drivers within companies that's shaping the integration more solidly within a strategy of an organisation, rather than it just be decoupled and a risk management approach?
Yeah, I think let me take a step back and just think more broadly, because when I think of this topic overall, I think of the drivers of ESG. I think the first thing I think of is just transparency, and we've touched upon this a little bit throughout the panel, but I think the key word here for me is transparency and accountability, and that goes back to a variety of things. It goes back to the fact that we live in an information age where we're in this constant state of hyper-transparency. People have a voice through the power of their smartphone, right? With the example that you gave earlier, Jackie, you have advanced technologies like AI and machine learning, which is what we also leverage, what RepRisk leverages in our research. You have big data. So there's all these things of living in the information age that really make us live in this age of hyper transparency, which then puts a spotlight on companies and puts, it brings to the fore the topics that maybe before wouldn't have been uncovered. And I think there's also this element of just having reached a critical mass over the last years. ESG was before maybe sidelined as CSR somewhere, but I think there's been so many different types of evidence over the last decade or more about how ESG issues are linked to compliance risks, to reputational risks, to financial issues. So many big stories of the last decade. I mentioned Boohoo, but also Wirecard or BP back to years ago, or Kobe Steel. They were all ESG related in some way. And sometimes people refer to ESG as non-financial or extra financial, and I don't like that term at all. I think it's outdated, because I think if we've seen anything, we've seen that ESG incidents absolutely have financial impacts and absolutely have compliance and reputational impacts. So I think there's, going back to this to kind of put it all together, there's this element of this critical mass of understanding and awareness of why ESG issues are important and why they can't be sidelined, but rather must be holistically looked at in day-to-day business operations, in business strategy. And that awareness is built everywhere through all types of stakeholders: asset owners and asset managers, banks and insurance companies, consumers, civil society, and now regulators, which I guess we'll talk about as well. But I think this idea that we now see, right, where with ESG moving from soft law, where it's been governed by soft law the last couple decades, now moving into a space where it's going to have to be regulated in order for it to be meaningfully move forward. But I think it always goes back to transparency and how companies are now expected to do different things and really look at impacts and think about this thoughtfully and not just in a siloed manner.
Yes, no, and I think that's a really important point. And you raise about the financial versus non-financial language. And I think sometimes that signals internally to managers, oh, these are the most important things because they're financial, and these other things. And we've seen, in Australia, we're seeing our regulators really work with our finance sector to talk about executive REM and how we make sure that we're weighting what was known as non-financial really significantly. So it's how you make the money is as important as the money you're making. But I think you raised an important point that I sometimes don't know whether we think about the temporal nature of these things. So when we talk about accounting, we're often talking about the P&L and the short-term result, and every 6 months when we're reporting to the market, that on an accounting level can look quite good. But if you're eroding your capital base, financial and social capital, then you end up with a problem that ends up having to be paid somehow that impacts on your P&L. Siobhan, within your role within Westpac, but also within your role as co-chair of the Responsible Banking Principles, I'm interested in your view in this question. I mean, how are we going to drive the integration across our region more solidly?
I mean, I think even just starting with the principles for responsible banking, our very first principle is about calling for banks to align business strategy to be consistent with the SDGs or Sustainable Development Goals and the Paris Agreement. So we're really clear right up front. And we've now got almost half the banking system as signatories to the principles for responsible banking. So you've got a very clear signal now right across the banking system globally. But of course, it's then how does that translate into what you're actually doing as an organisation? And what the principles are very clear about is really understanding impact. So back to the earlier question we had around impact, and really understanding what impacts matter most and where you can drive the greatest positive impact, but also we can address the greatest negative impacts and reduce those as much as you possibly can. And I think we also just heard that the interesting point around disclosures. And I think the fact that now there's a big focus on how you communicate what was once referred to as the financial and non-financial risks. But now, as we see SASB and GRI and other entities starting to come together, we've got the formation of the Value Reporting Foundation. We've got the IFRS Foundation now working around how we bring all these different elements together, and the expectation that you're linking these ESG dimensions to the financial performance of an organisation. This is an extraordinary shift around how we bring all these ideas together and how you actually then compel the different parts of an organisation to work really differently around how you factor in these different elements. Certainly from my perspective, and certainly when I talk to my peers internationally, we're now finding that we've got the overarching sustainability team responsible for policy work and for the sustainability strategy, but we're spending our days talking to our risk teams around how these risks are then factored into the frameworks and into how decisions are made right out on the front line. We're talking to strategy around how are these dimensions now being factored into strategy, and the cost implications or the revenue opportunities that need to be factored into strategy. And then, of course, as we think about the business lines, what does it mean for them in terms of how they factor in these risks and opportunities as well? Where might those opportunities emerge for different kinds of business lines? And where, in particular for a bank, are there opportunities for sustainable finance? And so you actually need all those elements actually humming away together in a really coordinated fashion. And I think we're all learning. I think what's really exciting, and I even reflect on Westpac's sustainability strategy, and I think about our 3 pillars. The first is helping people when it matters most, and the second one is helping our nation succeed. But the third one is around collaborating for impact. And I think that's really interesting. And for me, I had this reflection when I attended the launch of the Principles for Responsible Banking back in 2019. What was clear then is that we were shifting away from once upon a time competing on our sustainability credentials to actually a real insight that if we're going to address these problems in a really substantive way, that we need to collaborate both within our organisations but also as a sector. If we really want to drive change, we need to learn from the methodologies that we're developing and actually really get serious about how we can drive for these kinds of changes and positive impacts that are required. So, it's quite exciting, but that degree of integration is so necessary if you really want to make these changes happen.
I think what you raised about the cooperation and collaboration is a significant one, because at UNEP FI we've seen that, haven't we, across each parts of the principle-based with insurance and banking, and we're seeing it with the PRI, but we're seeing it across our sector. And the fact that UNEP FI have continued to have growth in our membership in the last year actually says people are seeing this as really important to know how to work together. And I'm reflecting as you're speaking and as I'm about to make my comments about how we need to think about integrating this strategy. And I reflect on, and it's going to date me here, but when I learned strategy at an MBA level, you know, and I was first group executive, it was about how competitive advantage is secured through exploiting your external resources. Now let's pause and think about those words on sustainability. So it was about how you exploit things, and then we wonder why we ended up where we are, both on environmental and social issues. And it's reinforcing today hearing the panelists saying, actually, it's this collaboration. We still have to compete. I mean, that's how markets are created. But there is something about things where we collaborate, so we're doing better than the individual parts. And I think that's a really important point.
Agree, Jackie. And I think what's exciting is that rather than the idea of it about being exploiting, the shift is now, how can we help? How can we help companies transition? Or how can we help companies reflect on the human rights impacts of their operations and support them to create the changes? And how can we help them? And how can we leverage the relationship we have with those organisations to create that shift?
Yeah.
There's a real shift in the mindset here.
And I think that shift in mindset, another key driver I think that we're seeing is at board of director level. So we often, and you know, being a non-executive director myself, we often think, I wish those managers would change. And I know when I was an executive, a group executive, I wish those people would change. But actually it's about the group executives and the board members have to change, because their role needs to be different. And I've been heartened by the work that UNEP FI have been involved in on fiduciary duty, because it's making it very clear. And we've got some opinions that have come today in our media and some of the law firms here in Australia, calling out that, let's remember, here in Australia, our corporations law doesn't say your fiduciary duty is to shareholders alone. It's to the best interests of the company. And it's back to Alexandra's point about time frame, that if you're producing a result in a short term that impacts on your long-term result, that is not in the best interest of all stakeholders for your company. And so I think what you're saying, Siobhan, about impacts on everyone's role includes boards of directors. And we've heard here in Australia, the Australian Institute of Company Directors have just launched a whole education session on stakeholder voice. And so right round our boardrooms, they're hearing the message that now that's going to be interesting transition. As executives and boards, we try to work out how the roles fit together, because it's not about getting in the road of management, but it's about how do we govern on these things. That's not just a compliance lens. So handing to you, Ed, because you've got quite a broad remit in your role and few countries, few products under your wing. I mean, how do you see this about driving integration into strategy?
Yeah, well, I think, you know, Jackie, I'll sort of double down on your MBA strategy analogy, right? Because, you know, there is, I think, one constant on the strategy lens is that, you know, we need to consider the full stakeholder map, right, in moving from awareness to action, right, and moving from, you know, ESG being kind of agenda item 12E.2 on a board agenda to being interwoven into a company's, you know, practices and standards. And I think that requires all stakeholders pushing in the same direction. And what's pleasing is, I think for the most part, that's happening. And certainly what I see around Asia, it is happening. I mean, certainly shareholders have led that drive, and a lot of that, you know, thanks to the good work of UNEP FI and others, right? Institutional investors have become more demanding. And the second point, as Siobhan and Alexandra mentioned earlier, is there is definitely a push from regulators. You know, if I look at what MAS have released now in terms of their guidelines on environmental risk management for banks, insurers, asset managers, Hong Kong Monetary Authority, Insurance Authority, Securities and Futures Commission have just launched a new cross-agency Sustainable Finance Steering Group. And this is great because it creates pressure on, creates good downward sort of, pressure on companies, regulatees, but it also creates this kind of international one-upmanship between regulatory regimes, which I actually think, again, is a force for good in a region like Asia, which until recently has been quite a long way behind other parts of the world in this regard. And I think that's the third sort of stakeholder, as you mentioned very eloquently, Jack, is around the board. And in the role of independent directors as long-term stewards of a company to protect and grow the company's value. And part of that value has to be social capital, and the goodwill, tangible or intangible, you create as a good corporate citizen and by being a force for good, in the communities you serve. And I think independent directors in this part of the world are becoming now more aware of their, to your point, fiduciary liabilities and the need to discharge them properly. And I think some of that's easier to do, where, if you look at sort of gender equality, if you look at diversity and inclusion, it's easier with observable metrics to force companies in that right direction. Some of it's harder to do. Mental health is an area, I think, which is about to explode in this part of the world, and cultural taboos have kind of made this not a talking point for a long time in Asia. But COVID is gonna transform that, and is transforming the awareness of mental health and the need for companies and employers to take this seriously. And then, of course, the fourth and the most important stakeholder is customers. And I think we're catching up. I think awareness is increasing. And HSBC ran a survey across Asia last year on customers' awareness and their views on the roles financial companies should play in creating sustainable society. And the results were really promising. So in China, 83% of our customers said financial service roles have an important role to play to create a more sustainable society. 25% of them said they are actively committed. We will go out of our way to make sure the financial companies we bank or insure or invest with do this. And 58% of them said that they're casual, right? We'll take some action if it's not in our inconvenience, right? And over time, I think we will move more of those casual advocates to committed advocates. So I think, there's a lot of points all pointing in the right direction. For sure, international companies are moving faster than local companies, to be expected. And I think in that international companies need to play a helping hand to help some of the local companies sort of get up to that level of velocity and adoption. But I'm very positively encouraged by the progress that's being made.
And great point raised about employees. I think for the companies that have been focused on sustainability for some time, and I know Insurance Australia Group are no different, one of the things that we saw was heightened engagement and cultural scores through one of the most difficult periods where employees were having to adapt. But they saw that social capital playing out both in looking after the customers, but looking after the employees themselves, which has that reciprocal impact on they will look after the customers. So you've got this dynamic, and I think it's important that we don't lose that point, that often when we're driving environmental and sustainability actions, it's actually our employees who know whether it's credible or not, or whether it's greenwashing or rainbow washing, because they know firsthand what's being communicated internally versus externally. And I think COVID, from my experience here, and as I said, working with Insurance Australia Group, hearing how it really helped their cultural measures because they saw it as very credible in terms of the response, aligned with the statements on environmental and social activity and communities. And obviously being an insurer, it was impacted by the bushfires as well as the other weather events. So a great point. Now, I'm aware of time, and what a rich panel. I mean, we've covered from impact to COVID and to the drivers of strategy. I'm going to give you each 1 minute to sum up about what you think this next year is going to bring for us in terms of what we need to keep focused on to keep driving this agenda. Siobhan, I'm looking at you, so I'll go to you first.
Great, thanks, Jackie. So look, I mean, it's such an exciting time, but I am really passionate about the importance of this integration or embedment. So now more than ever, it's about within your organisation, bringing people together around this shared agenda. So bringing together risk, strategy, your business lines, and really working through how you embed this right through to the front line. I think cooperation is more important than ever. So how you work with organisations within and beyond your sector, how you think about how you drive this through your client relationships and also through your supply chains. And there's an expectation that you're doing that now as well. And then it's about shorter term targets, being clear about where you want to have impact or where you need to have impact. But the expectation is now shorter term targets, delivering against those targets, but always having that long-term view around that more material, that long-term impact that you need to achieve. And then harmonisation, how you bring it together.
Thank you, Ed.
Very quickly, talk, educate, right? The world's gone through a series of tragedies over the past 12 months. If there is any positive to take out of it, is that, you know, societal awareness of sustainability has never been higher. So running a company, if you're on a board, if you're an HR director, if you're a sales head, if you're customer staff, you know, you have never had a more conducive environment to talk about, to promote, to educate, you know, and to embed, you know, ESG criteria into your businesses. If you don't do it now, you're missing out. So, you know, please take advantage to the extent possible, talk about it, promote it, do it.
Thank you, Ed. Alexandra.
So I think, you know, how a company manages ESG issues can be seen as a sign of how future-proof they are in a changing world. And I think COVID helped to underscore that. And after that, you know, you start to see all the different stakeholders holding companies at increasingly high standards when it comes to ESG. And therefore, it's also important that the data that companies use to take decisions is robust and high quality. And that's where RepRisk, data providers like RepRisk, can play a role to help. We help our clients, for example, systematically identify and assess the ESG risks in their business. So if you're a bank, you're using this type of data for risk management, for compliance, for KYC, but there's also a value added service that the financial industry can have, because you play a role in all sectors in the world. And we see data being able to be a conversation starter where banks and other financial industry players are actually supporting their clients and other stakeholders on their own sustainability journey. So really having this value creation function and long-term view. And I think it is an exciting time. I would agree with that, because I think there is a critical role that the financial industry can play in really solving and addressing some of these global challenges.
Well, thank you. And I'd summarise exactly the same. This is the time for us to lead, individual level, in our companies and within the society we live. And it's the finance sector really making a difference about business in society, and that people will need to trust us, but we need to earn that trust through all the work we do on our sustainability practices. Great opportunity. Thank you to my panelists for bringing this so to life. It's been a real joy having this discussion, and really look forward to the rest of the roundtable. Thank you.